Hi everyone, today we'll be going over accounts, May-June 2022, paper 2-3, question number 3. This is structured paper 2, which consists 4 questions, 2 of 30 marks and 2 of 15 marks, and we are given a time limit of 1 hour and 30 minutes. Since question number 3 is a 15 marks, we will be attempting to solve this question under 15 minutes. Now, without any further delay, let's get started. Nibras purchases and sells goods for cash and on credit. Control accounts are used to check the accuracy of the business's purchases and sales ledgers. Now, the following information is available for January 2022. First of all, let's have a look at the question. We need to prepare the purchases ledger control account for January 2022. Alright, so we are given that the purchases ledger account balances on 1st January 2022 were amounts owed to suppliers. So this is the opening balance on the purchase ledger control account that needs to be recorded on our credit side. And this amounted to 23,490. Let's record this as our opening balance, which we can write down as balance brought down, amounting to 23,490. Okay, we are also given another opening balance, amount overpaid to one supplier. So this amount overpaid actually decreases the balance on the purchase ledger control account, which means that this should be recorded on the debit side, and this amounted to 320. Again, since this is also an opening balance, this should be recorded under the heading of balance BD. So it's on the debit side under the heading of balance brought down with the amount 320. Okay. Then we are given totals from the books of prime entry. The first one is from the cash book. We are given cash purchases. And since we're talking about purchase ledger control account, we only record credit purchases. So we will be skipping this information. For the second one, we have payments to trade payables, amounting to 202,950. If you already made the payments, then it definitely decreases the balance of the purchase ledger control account, which means that this value will be recorded on our debit side under the heading of bank, because this is the payments made. So that's bank with the amount of 202,950. All right, then we have the discounts received. And discounts received definitely reduces the value of the purchases that we are yet to pay. So this will also be recorded on the debit side under the heading of discounts received. Let's do that. And this amounted to 4,920. Alright, then we have the purchase journal amounting to 212,480. So this is the total purchases made, meaning that this definitely increases the balance on the purchase ledger control account, which means that this should be recorded on the credit side under the heading of purchase. So that's purchase made with the value 212,480. Then we are given the return outwards journal, meaning that we purchased and then we returned it. So this is a purchase return. Purchase return definitely decreases the balance of the purchase amount to be paid. So this should be recorded on our debit side under the heading of returns outwards. And that amounted to 3,770. That's return outwards with the amount 3,770. Alright, then the last one we have is the contrast to the sales ledger, and we know that the contrast in the purchase ledger control account is always recorded on the debit side. Let's do that, and it amounted to 810. So that's contra with the value 810. We recorded all of our information, so now we just have to record our closing balance. And this is on the debit side because the opening balance or the amount owed to the suppliers was recorded on our credit side. So now this closing balance acts as a balancing figure. In order to figure that amount, we require the total. So let's figure out the total of the credit side. That's the sum of these two amounts, which is 23,490 plus 212,480, which results in 235,970. And the total is the same for the debit side as well. So that's 235,970. Now, in order to figure out this balancing figure, we just need to subtract these amounts from our total. So in this case, that's going to be 235,970 minus 320 minus 202,950 minus 4,920 minus 3,770 minus 810, which results in 23,200. Now we just need to record this closing balance as an opening balance in the opposite side. So that's balance CD, And the closing balance for this particular year will act as an opening balance for the next period. And the closing balance for this period will act as an opening balance for the next period. So we will record this same amount of 23,200. This concludes the first part of this question. Now we can move to the second one. We are again given additional information. First of all, let's have a look at our question. For the first part, we need to calculate the correct balance of the sales ledger control account. All right, so we will be starting with our incorrect total or the incorrect balance. So let's have a look at the above information. We can see that the balances of the sales ledger control account on 31st January 2022 is given to be 25,310. So we will be starting with this incorrect total. That's 25,310. Okay, now we need to figure out our correct balance by adjusting the given four errors. Okay, now we just need to segregate which errors affect our sales ledger control account and which errors affect the sales ledger account. The irrecoverable debt of 540 had been recorded as 450 in both the general ledger and the customer sales ledger account, meaning that this affects both our sales ledger control account as well as the sales ledger account. Then for the second part, we are given the total of the returns inwards journal 1,390 had been omitted from the sales ledger control account. So this will only affect the sales ledger control account. Then we are given the balance of a customer's account had been understated by 120. So the customer's account only affect our sales ledger and not the sales ledger control account. Then lastly, we have a credit note of 90 issued to a credit customer had been recorded correctly in the sales return journal but posted to the debit side of the customer's account. So again, this is an error relating to customer account, meaning that this will only affect the sales ledger and not the sales ledger control account. Okay, firstly, we'll deal with only those errors affecting the sales ledger control account. And the first one definitely affects it. An irrecoverable debt of 540 had been recorded as 450. So this is actually the understatement, right? And it is understated by the difference amount. So that's just 540 minus 450, which gives 90. So the value of irrecoverable debt is understated by 90 in our sales ledger control account. And we know that irrecoverable debt is something that reduces the balance on the sales ledger control account, meaning that we should also be reducing this balance of the understatement of value 90. Let's do that. So we need to deduct our irrecoverable debt understated by 90. Okay, now we can move to the second error. The total of the returns inwards journal 1,390 had been omitted from the sales ledger control account, meaning that the returns inwards had been understated by 1,390. And we know that return inwards is something that reduces the balance on the sales ledger control account, right? So that's a negative. Then if it is understated, then we actually need to add this amount back, right? So let's add it. Then a negative and a positive will result in a negative, meaning that this balance of 1,390 should be deducted in order to figure out our correct total for sales ledger control account. Similarly, for the first part as well, we know that it was an understatement and it was relating to irrecoverable debt. And irrecoverable debt is something that reduces the balance on the sales ledger control account. So that's a negative. And understated amount should always be added back. So that's a positive, which results in a negative. That's why we deducted the amount of 90. Now let's write this amount of 1,390. So that's less returns inward amounting to 1,390. And since both of these amounts should be deducted, we should be recording it in a bracket, indicating that this should be subtracted. All right, now we can just figure out our correct total. That's 25,310 minus 90 minus 1,390, which results in 23,830. All right, now we will calculate the correct total of balances in the sales ledger. Again, we will be starting with our incorrect total, which is given in the above information. Let's have a look. So the incorrect total of balances in the sales ledger is 23,980. Let's write it down. Okay, then we know that the first error obviously affects the sales ledger, And this is an understatement of the irrecoverable debt by 90. Again, what we know is that irrecoverable debt is something that reduces the balance of the sales ledger account as well. So that's a negative. And the understatement should always be added back. So that's a positive, which results again in a negative, meaning that this amount of 90 should also be deducted from the incorrect total of the sales ledger. Let's do that. So that's less irrecoverable debt of 90. And since it's a negative, we need to record it in a bracket. Alright, the second error does not affect the sales ledger, so we can skip it. Then the third ledger, we know that the balance of the customer's account had been understated by 120. We know that the balances on the customer account obviously increases the balance of the sales ledger, right? So that's a positive. And this understatement should always be added back. So that's another added back as well. So two positives still result in a positive, which means that this amount of 120 should be added back to our incorrect total of the sales ledger. Let's do that. So that's plus understated balance amounting to 120. Okay, then we have our last error which affects the sales ledger. We have a credit note amounting to 90 issued to a credit customer, had been recorded correctly in the sales ledger journal but posted to the debit side of the customer's account. So a credit note should have actually been posted to the credit side of the customer's account, right? And if we posted it to the debit side, then this actually adds in the sales ledger control account, but it should have been actually deducted. So we added 90, right? But what we require, the correct entry, would have been a negative 90, meaning that 90 should have been deducted from our sales ledger balance. Now, in order to rectify, if we deduct 90 once, then we get a 0. But what we require is a negative 90, meaning that we need to deduct 90 twice in order to get the correct balance of negative 90, right? So two negative 90s. So that's minus 90, which results in minus 180. So what we need to do to correct this fourth error is that we need to subtract the amount of 180 from our incorrect sales ledger balance. Let's do that. So that's less credit note, and we need to deduct the amount of 180. This concludes all of the errors. So now we can figure out our correct total. That is just the total of these four amounts. So that's 23,980 minus 90 plus 120 minus 180, which results in 23,830. Now, in order to check whether these processes have been right, we just tally our correct total for the sales ledger control account and sales ledger. They should be the same amount. We can see that the correct total for sales ledger control account is 23,830, and the correct total of balances in the sales ledger is also 23,830, which means that our solution is correct. So this concludes the second part of this question. Now we can move to the third one. We are given additional information. Control accounts do not reveal every type of error. Now we need to state three types of error which are not revealed by a control account. The first one is error of omission. And this is a kind of error in which we forget to record a particular transaction. The second one is error of commission. This is the error in which we record the correct balance to an incorrect heading, but the treatment of that particular heading is the same towards our correct heading. Meaning that, let me give an example. So if we have a salary expense of 2,000 and we have our wages of 4,000. And these two should be recorded in the income statement, right? But if we are to record this 2,000 under the heading of wages, then that gives the wages total of 6,000. This is an error, but this does not give any wrong profit, right? Because the treatment is the same. The salary is also deducted and the wages is also deducted. So this kind of error falls under the error of commission. Then the third error is the error of original entry. So if you make an error in the first basic entry in our journal, then that error will not be revealed by a control account. So this concludes the third part of this question as well as this entire question. If you found this video useful, make sure you like the video and leave a comment below. And make sure you subscribe to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.